Rob Roham here again with Compass Real Estate. 1031 exchange. What is that? Today we're going to talk about details on the 1031 tax deferred exchange. It's the IRS code 1031 tax deferred exchange. And that's mainly for income property that you have, not your primary resident. We've already talked about all the processes of selling a property, everything from listing agreement to inspections, disclosures, purchase contract, escrow, taxes, and now 1031 exchange, which is related to selling income property. On your primary resident, you still pay taxes, but it's a little different structure. With investment property, like we talked about, you pay taxes on your taxable gain amount. Again, what you sell it for minus all your commission and closing costs, minus all the capital improvements, minus what you purchased it for, and that gives you the taxable gain of how much you've gained on this property. Of course, the depreciation that you took over the years comes back into the pile. Talk to your accountant about details on that and everything else about tax situations. But on a 1031 tax deferred exchange, that's how you pay taxes. Now, if you don't want to pay taxes, great. There is an option for you. Wonderful. And that's called 1031 tax deferred exchange. You have to sell and buy another property of equal or higher value of the one that you sold. That's a 1031 tax deferred exchange. And it has to be like-kind property, as the IRS puts it, like-kind property. So if you sell a rental property, you buy another rental property. You could sell a single-family home, buy a fourplex, or you could sell a fourplex and buy a commercial industrial property. It's still like-kind rental property. Talk to your accountants for more details on that. Also, you could do what is called a reverse 1031 exchange. Wait, let's take a step back. On a regular 1031 exchange, you have 45 days from close of escrow on your existing property, 45 days to identify 3 properties that you will buy one of them. You register that with your exchange intermediary, and you have a total of 6 months to buy one of those 3 properties. You can't switch them, you can't change them around. You register 3 properties and you have to buy one of them. That's the IRS rule, but most people end up just identifying one property and buying it, unless it's something that's off market that you have access to, which normally is not the case. So that's a 1031 exchange guideline when you want to sell and buy another property and defer your taxes. So now you don't pay any taxes, you defer it to the next property until you sell that property, and you could do another exchange and another exchange and keep going. But if you sell the next property, then you have to pay taxes. Now, a reverse exchange is where you go buy a property first, then you come back and sell your existing one. That's a little different, a little tricky. Definitely need some professionals to help you there. More costly, it costs you a lot more money, but it's an option that's available and some people use it. If you have more questions and would like more information, you can DM me right here. Rob Roham, real estate broker with Compass Real Estate, 35 years in the business and over 1,300 properties sold. Thank you and have a great day.